In December 1857, a struggling farmer in St. Louis pawned his gold watch and chain to afford Christmas presents for his children. That farmer was the future president, Ulysses S. Grant. Grant was part of a larger collapse. Within weeks, a financial hurricane had devastated the global economy, erasing fortunes and shuttering businesses across several continents. This crash followed a decade of feverish optimism. The 1850s boom was driven by massive wealth generation, largely fueled by miners extracting tons of gold from the California hills. Technology accelerated the cycle. For the first time, information and capital moved via a telegraph network, allowing market trends to transmit at the speed of electricity. This speed did not lead to stability. Instead, the influx of gold and rapid communication built a speculative powder keg, primed for a single spark. By 1857, the United States functioned as a web of three separate economic systems. The Northern model focused on immobile infrastructure. Capital was sunk into fixed assets like factories, iron foundries, and a dense network of local railroads. The Southern model relied on mobile wealth. Capital was concentrated in enslaved human labor, which drove an agricultural engine that sent its profits outward toward Europe. This system was vast and profitable, utilizing enslaved workers to harvest massive piles of crop for the global market. The Western model operated as a real estate bubble. It was driven by speculation rather than established industry, with values inflating as fast as money could flow into new land parcels. Developers were laying hundreds of miles of paper railroads, lines that existed mostly on maps, funded by foreign investors who assumed the wilderness would soon fill with settlers. The entire national economy rested on the assumption that northern migration would continue west indefinitely. In March 1857, the Supreme Court issued the Dred Scott decision. The ruling legally opened the Western territories to the expansion of slavery. This legal shift triggered an economic shock. Northern settlers feared the slave-based mobile asset model would take over the West and diminish their own investments in fixed towns and rails. As a result, migration stalled. Without new buyers arriving, Western land valuations collapsed. The paper railroads were exposed, left with unpayable debts and no passengers to generate revenue. A ruling on human rights had accidentally popped the largest speculative real estate bubble in American history. In August, the Ohio Life Insurance and Trust Company failed. The firm had invested too heavily in Western railroad debt that was now worthless. The telegraph network, designed for growth, now transmitted the panic. Within hours, news of the bank failure reached every financial hub in the country. Bank runs began. Depositors rushed to withdraw physical gold, draining the vaults of the cash needed to keep the system running. Then, a hurricane hit. The SS Central America sank to the bottom of the Atlantic, taking thousands of pounds of California gold with it, just as New York banks were running dry. The credit markets locked up, interest rates reached 60%, and banks unilaterally suspended gold payments. This lack of liquidity bankrupted the West and forced Northern factories to a dead halt. Northern industry faced mass unemployment, but the Southern economy emerged from the panic unaffected. The global demand for cotton was steady. European textile mills kept buying Southern exports, even as the Northern credit system stayed frozen. The panic created an asymmetric reality. While the North languished in a depression, the South felt invincible. Southern elites watched Northern bank runs and concluded that industrial wealth was weak and artificial. This perceived strength destroyed the appetite for political compromise. Emboldened by their financial resilience, Southern leaders began to aggressively reject Northern policies and move toward secession. In the North, the Republican Party pivoted to a message of economic protection, unifying Northern voters and paving the way for Abraham Lincoln to win the presidency. The Panic of 1857 redrew the map of power. It illustrated that a financial collapse can embolden regional ideologies and push a divided nation past the point of no return.
Thanks for watching. Please subscribe to know and learn for the historic events of the time.